So, Gary, just to pick it up on my question in terms of the impact that SVB has on the broader economy, is it not deflationary? And therefore, we won't have to have the Fed raise rates. And therefore, maybe the equity market is correct.
Oh, it is deflationary, but that doesn't mean the Fed is going to reverse gears now. I mean, their target is 2% inflation. They're particularly concerned about service inflation, which is running about 4%, twice that rate. And services are mainly labor. There are very few. There really aren't any goods produced involved in producing services by definition. You don't produce any services. I don't produce any services. Goods, rather, it's services. And so the Fed is looking at labor costs in particularly in the service area, and they're running about 4%. They're running much higher than is compatible with the Fed's target of 2% inflation. So I see no reason why the Fed is going to reverse gears. The Powell points out numerous times in the past where the Fed has backed off prematurely. You might remember back when Alan Greenspan was Fed chairman, the concept was the Greenspan put. In other words, Wall Street could put any problems to the Fed. The Fed would bail them out. And then that was followed by Ben Bernanke when he was chairman. The Bernanke put, then Yellen, Janet Yellen was the chairman, the Yellen put, and everybody thought there was going to be a Powell put, and Powell said, "Oh no way," and so it's a different environment, and to expect the Fed to reverse gears here, I think is very, very premature.
What do you see as the impact on the economy right now from SVB, or maybe it was going in that direction to begin with?
Well, it is beginning to roll out, and you look at layoffs. I mean, I'm just amazed what's happening. McDonald's, you're probably familiar with that story, where they told everybody stay home and wait for your severance notices. I mean, boy, you talk about putting people on pins and needles. But these companies it isn't just the tech companies that really overhired during the pandemic, and they admitted it, and they were laying people off. But now it's gotten into the guts of the economy when you see McDonald's, huge employer, close to 200,000 employees, when they are laying off people and telling people, wait at home for your severance notice. I mean, that's pretty rough stuff, but it is telling you what's happening. And labor markets are easing up at a rapid rate. You look at the employment numbers; they are easing back, jobs availability, and so on. So this area of in the labor markets, I think, is turning around now. How long is it going to take before the Fed is going to be satisfied? Probably a lot longer than you think. I think the Fed, they want to kill inflation. They want to kill it dead. So they're likely to continue this restraint probably till the end of the year.
So basically, they want high unemployment. That's what they want.
Yeah, and they pretty much said so. They pretty much said, damn the torpedoes, full speed ahead. They're out to kill inflation, and they made it very clear that they understand the economic consequences. They don't use the word recession, of course, but they, in effect, say it's going to be a bumpy road. They use any euphemism for recession, and that's what they're saying. Just pure simple. It doesn't take a genius to figure that out.
Right. It's we've got earnings season upon us. It's going to be very interesting to hear what the company managements have to say, and also, quite frankly, interesting that McDonald's came out and made this move right now. I mean, in some ways, as a company management, you might just wait, till around you report your earnings, possibly. But I'm also really curious, Gary, what you think. I want to go back to SVB because I also want to get from you what you liken it to historically. But it's going to be really interesting to see how the bank management communicates SVB on their quarterly calls. What do you think they're going to say, or what should they say?
Well, of course, it's under new management. It's basically they bring in the cleanup crew, if you will. The old guys that got it into the mess are gone. So the guys who come in, they have no hesitation to say, well, the previous team really screwed it up, and we're going to try to clean up the mess. So
Gary,
So
I mean the big banks. I mean the large cap banks in the United States. Because I'm wondering if they're seeing any kind of cracks or concerns with respect to unrealized losses.
um, yes, but they don't need to declare them under the bank rules. If they have bonds that have declined in value as interest rates have gone up, if they call them that they're holding in their portfolio,